So today, the topic for discussion is two things. One, adjusting to the new market condition, how we can learn from what's going on, where's the breaking point, what I've learned in the past few years compared to now, and various other things. So first off, I'm going to talk about penny stock volume. Now I'm going to share a screenshot within the premium chat. Where is it now? And this is a fellow trader I know, Stephen Ducks. Pretty good guy to watch. But let me put that on the screen for those of you who are watching it later. Now, basically, what he's found and what other traders have found is the significant decrease in penny stock volume within the past 3 years. We're going to talk about why that is first. Now, the main reason is stimulus check money. A lot of people had a lot of money to trade with, in the last few years from the stimulus check. They wanted, they had some extra cash laying around to invest, to trade with, to kind of get rich, if you will. Now, a few things to note. Yes, it does suck. Is this going to be the new norm? No. This has happened before, and I went back and back tested this. Now, we did see immense penny stock volume in 2020 and 2021. That led to me making probably close to $1 million in those 2 years in just penny stock trading. Some of you guys who joined watched me make 25, 50, 100K in a day. You're not seeing that now. I'm trading with much less position size. My goal leading into this year was actually to 3x all of my positions, to get to that next step of trading, to trade with $300,000. Now, as of right now, I'm not going to do that. I'm stepping back. I'm going to put myself in something that we call trader rehab, which means I now limit all of my position sizes in half. I'm going to continue to do this for a decent amount of time. Trader rehab is something I've done before. Until the market sparks and a whole sector pops off again, that's one thing we're going to be doing. Now, another thing I'm going to be doing is I'm actually actively opening other trading accounts to start borrowing shares on some of these stocks. Every single stock that makes a pop to the upside, say 200% retracement or more, ends up crashing back down to the ground soon after. So I'm actually going to now switch to become a short bias trader in the next few months. I think there's more opportunity in the downside than the upside. Now, I know a lot of you guys have a problem with shorting because you're betting on something failing as opposed to something succeeding. I have no problem with it because, price has to go down so that things can become overvalued. So I do not have a problem shorting. So I'm checking out various other accounts, Lightspeed, TradeZero, Guardian. These are all softwares that we can then use to short these penny stocks that are easy to borrow, that might have higher borrow fees, but at least we're able to short them. And I'm going to start switching to becoming a short bias trader within the next few months. If that means I have to be more selective to a point where I'm only trading one time a day, so be it. But there's 30, 40, 50% downside potential for these stocks that we could then short and capitalize on. I know a gentleman that turned $27,000 into about $1 million in a year, and he traded probably, I think, 4 to 3 times a month. So by being more selective, you could then be more profitable. If you took just the top 3 trades I took this month, I'd be up about $35,000. I ended the month only up $4,200. I just checked. After fees, commissions, and everything like that, practically a minimum wage. For the month. Now, obviously, not every month is like this, but this is the worst month I've had since August. That was the last time I ever actually had a red month. Closing the month out green as of right now, depending on where Tesla closes. But it's kind of demeaning, right? Coming off of strong months, March, April, even February was really good. January wasn't really. Obviously, it is rather demeaning, giving back about 5 to 8K in profit in the past 2 trading days, to close out the month it's not always fun to do. But we have to be able to adapt to certain market conditions. What are those? Like I said, number one, we're going to become short bias traders. And a lot of you guys don't really know what that looks like, and I'm going to show you guys what that looks like. I have several friends who are short bias traders who I have access to their course material, and I'm going to be doing that myself. There's just a lot more opportunity to the downside. Going to become much more selective. We're putting ourselves in trader rehab, and I'm going to cut my position size in half. A lot of you guys, I probably would have made 25, 30,000 this month had I had my short orders filled on some of these stocks. You guys are seeing me kind of get frustrated because my Thinkorswim is not filling me in these short orders, and I'm glad you guys are making a lot of money on it, but I need to do what's best for me and my account. So we're trying other softwares. We're looking at what the best trading software is to the downside, considering borrowing fees, filling, and everything of that nature. And I'm going to keep you guys, 100% posted in the clear of some of these. So kind of going back to some of the stocks that we did trade on, PEGA was a stock that we traded to the short side on this day, shorting below 65 for a push all the way down to 32. 50% retracement. That is an excellent trade. I can go on and on about some stocks that I have kind of prepared to show you guys that the short side currently is stronger than the upside. Meaning, if you are longing a stock, it is harder to make money than on the downside, for a few reasons. A lot of people don't know how to short. They kind of go long, but it's a lot of the newer retail traders don't know how to short. So a lot of big money traders are taking advantage of that and shorting stocks into the ground. So I know you guys aren't gonna know what it looks like to short a penny stock. I know. Kind of what it looks like. Obviously, I think this is going to be good for a lot of you guys because if we could learn how to trade to the downside, we're also going to know what to look for when we're trying to lock in profits on the upside. For example, if you think the stock looks like it's a good opportunity to short it and you're long, you might want to start cutting profits, start locking in profits. So there's a lot of pluses to trading to the downside. I'm going to be doing this until retail trading picks up again. There's other websites that can track that. Now, what does that look like? Fed giving a new stimulus check. Fed not increasing interest rates too much. People not having more cash in their pockets, not having to pay bigger mortgages. Rents not going up. Them combating hyperinflation. The problem with penny stock volume is not everyone has access to funds to trade right now. And one thing that we're going to do as a team is we're going to start teaching you guys how to pull in outside investors to help fund your account, to be able to help short these stocks to the downside. So we're going to teach you guys that. That's kind of one thing we're implementing later this week. It's going to take a while. We're going to, look at all the brokers that's best for everyone. Talal, I see your comment. I'm going to consider what the best platform is for me and my team, which most of us are in the U.S. However, TradeZero is the one I have on top of my head, which is very accessible to EU traders. So more than likely, we'll all probably be switching to a newer platform. I got to do this for the betterment of my account. I think there's just a lot more opportunity to be had. A lot of you guys might think, oh man, you're not longing penny stocks anymore. First of all, it's not true. I'm going to be trading penny stocks to the upside. And second of all, if you think there's not enough opportunity shorting to the downside, there 100% is. Like I said, I know a guy who turned 27,000 into about 990,000, about 12 months shorting said penny stocks. So that's what we're going to do. Obviously, if the market turns around and in 2 weeks, there's stocks just flying, going hundreds of percent to the upside and things of that nature, I'm, going to, put myself out of trader rehab. But until then, we have to adjust to this new market condition. I'm going to try to encourage all of you guys to continue to stick with it because let me promise you one thing. If you guys are profitable now, and you guys are making money now, or even break even, or even outperforming the market now, when the market does reverse, you are going to make a whole lot of money. Like I said, one hot market cycle can greatly change your financial situation. It did to mine. I was able to turn $25,000 into just under $250,000 in just a few months trading in a hot market. And you guys saw what that looked like. We saw DWAC pop, we saw Fun pop, we saw some of these stocks make 1,200, 1,300, 3,000% gain in a day, just squeezing short sellers out. But as of right now, shorts are winning, and we're going to start to convert over to short bias traders. And that's one thing that we're going to teach you guys how to do. Similar questions you have. Penny stocks, are they more riskier now? I wouldn't say riskier because they're less volatile. I'm going to say that. The more volatile a stock is, generally the riskier it can become. But I'm going to say penny stocks are now harder to predict. With less amount of volume, it's harder to predict those penny stocks. I sized up on HUSA. It was a perfect 5-minute pullback setup, retesting the high a day for a move higher, and it failed. I was pretty shocked. And that's not the first time we've seen that. I've seen plenty of failed setups this week. So there's other things we're going to be doing when it comes to longing stocks. We're now going to buy with anticipation of the break, giving us a barrier for an entry. For example, if we bought HUSA at 535 before the break, anticipating the break, and then maybe adding for the break of 550, our average would be much lower, which is good because now we have more room to play with, more money to play with, and we can lock in profits quicker. Instead of locking in profit at the 75-cent intervals, I'm going to now be locking in profits just before it at around 570 in case it doesn't break. We're seeing these psychological resistance lines be too strong for these penny stocks, so if we can buy with anticipation of the break and sell just before it, we're going to make the same amount of money, but we're just going to have to tweak our strategy a little bit. So we're going to help you guys with how to do that. Again, this is we're going to be teaching this in one-on-one lessons. This is chapter 2 and chapter 3 of the book we're going to be coming out with. But all I can say is please give us some time to, first of all, kind of formulate the strategy around shorting these penny stocks. But secondly, finding the best broker out there. I've already applied for 2 different brokers in last week. I didn't tell you guys yet, but we got Lightspeed, we got TradeZero, and there's going to be some other platforms. Are commissions going to be higher on these platforms? Yes, but we can now have access to short a whole lot more stocks that we don't have available on some of these commission-free platforms. I'm still going to be trading on Moomoo. Mostly, I think Moomoo is a great platform, but I'm going to find another one for shorting, and I'm going to keep you guys kind of in the loop for all that one. Penny stocks, I already answered that. What's your proposed timeline for a switch to shorting? It could be, I'm going to be trying to do it as soon as possible. I don't have a timeline of like, okay, the market's going to reverse here. No one does. All I'm saying is there's just a lot more money to be had on the short side than the long side. Now, this is going to switch in several months. This is why I'm not going to be a forever short-term trader or a short bias trader, is because when the market gets hot, short traders get squeezed out of position so quickly it's not even funny. But as of right now, the market is showing no signs of strength, and in my opinion, I think we're going to continue to see weakness and weakness to the downside, which technically means weakness to the upside, which means strength to the downside. In order to do that, we have to start shorting stocks more. That's just kind of my take on this. A recap, retail trading volume is down a lot. This is not going to change until Feds start, keeping interest rates at a level head, not increasing them dramatically, finding a way to combat hyperinflation. People now don't have access funds to start trading with, or there's some sort of stimulus check, which kind of circulates into the market, and we start seeing penny stock volume spike again. Those 3 things I don't think are going to happen for a little while. So we are going to start shifting into short bias traders, adjusting with the market conditions. And we're probably going to do this for several months. We're going to short a whole lot more. We're going to short penny stocks a whole lot more. And hopefully, in turn, we're going to make a whole lot more money. Now, like I said, shorting, there's unlimited downside and only limited upside. But in my opinion, with a proper strategy, we're going to make a whole lot more money in this cycle because the strength is just to the downside. We're seeing stocks fall faster than they're rising. For example, looking at some of the stocks that are getting halted going down, they were resuming much lower and continuing lower, which is great. Stocks that are halting to the upside, how many times did we see this month a stock dip and not rip? The dip and rip in a hot market cycle is my favorite strategy. I've made well over 6 figures on the strategy. In fact, I made over $50,000 on the strategy in just one stock alone. So the dip and rip is awesome. But we're just not seeing stocks open and resume higher. We're seeing them resume lower, dip, and then continue to dip. So some of our strategies we have to tweak. We have to limit position sizes, and we have to change the direction of the type of stock we're trading. That was about 15 minutes, kind of all I wanted to get off of my chest here. I'm going to obviously help, kind of talk about the strategies we're going to be using. Remember, 3 pullbacks is generally the max amount of pullbacks for certain stocks. So what we're going to be doing is we're going to be counting the pullbacks, we're going to be counting the consolidation levels, and we're going to be shorting off of those pullbacks for a move down to those consolidation levels. I already kind of understand what I'm going to do. I would already do it already if I had shares available to borrow on some of these stocks. You guys feel free to answer or raise your hands or just type in premium chat. There's a lot of bull traps faking out the market reversal, market thinking. Exactly. There's a lot of bull traps, which means we're going to continue to lose money if we're trading to the long side. A lot of you guys were wondering if I was planning on adding to my Tesla long when it broke above 700. I said no. I think there's still more downside to be had with the overall market. It's just my personal opinion, and that's why I haven't added super heavily just yet. I think I just answered that question just there, just because I think there's more downside to be had. So I want to wait for a better average. Let me see if any of y'all are raising your hand. Doesn't look like any of you guys have any questions. Does anyone want anything to add? Like I said, I'm not going to not long stocks anymore. If there's still a hot penny stock, I'm still going to be trading it with just half my position size. When I size up, it's going to be generally on a lot of short positions. So another thing about shorting is in order to make more money shorting, you're going to need to increase position size. For example, shorts, the maximum a short you can make on a short is 99%. The maximum you can lose in a short is hundreds of percents. So in order to make money on the short side, because the amount of money you can make on a short is very limited, you have to increase your position sizing. So I'm going to be using some leverage on some shorts and things like that. Other than that, is there any other questions? I feel like I covered everything I wanted to do. Last thing, I'm going to go back to long bias trading when I start to see penny stock volume increase again. It's been steadily decreasing, like that chart I showed you guys, since 2020. So 2020 was great. 2021 was even really good. But 2022, as of right now, is not looking that good. Even the hot market cycle we had in 2022, 2 weeks in February, it was 2 weeks. Usually hot market cycle is several months of trading, and that's how you can get really, really rich. And that's why you see all the get rich quick videos and P&Ls and things like that in those times, because if you know what you're doing, you can get rich very quick in a hot market. And I'm not just saying that to encourage you guys. I'm simply saying that because that's what happened to me. I've made more money if I can condense the best 3 months in a year than adding up the other 9 months. It's ridiculous. October, November, December, I made more money than any other month combined in the rest of the year. But I have to be diligent in showing up every single day because I never know when the market's going to reverse. No one does. So last thing, highlight, again, going to be shorting more, going to be switching brokers. I'm going to be contacting Moomoo, seeing if I can short more on Moomoo. I'm going to be reducing position sizing on my long positions, and I'm going to become even more selective than I am already. Okay, I think that's about it. Is there any questions? Feel free to raise your hand and come up on stage to add any questions. Now is your guys' time. I'd appreciate if you'd ask it now than a little bit later. We'll give you guys about 2 minutes, 2-3 minutes. Ooh.
Right. No, thank you for giving us a call. So, was it an older gentleman or a younger gentleman?
Okay, first Jake and then R. Kelly.
Okay, can I get a good callback number for you, Roger?
Jake, you want to unmute your mic, buddy?
There we go. So, Jason, why did you think, what indicators were there that made you think that Oxy was going to continue to go down today?
It was a gap fill play. If you look at Oxy, 72 is a strong support line for Oxy, and that's where I was planning to buy more shares. But if you zoom in on it, there's a gap to be filled from 72 down to $70 a share.
Okay.
And that's why I intended on shorting. All the other energy stocks started tanking, so I was figuring we're going to get some sort of a sympathy momentum to the downside. HUSA continued to go down. The overall Nasdaq started to go down. ETFs, energy ETFs started to go down. So I figured that OXY was going to continue to go down had it not broke 75 in the initial push this morning. Obviously, I wish I stuck to my original plan of swinging it, but I didn't.
Okay, so.
And I ended up losing about $2,000, about $1,000 on the long side, and about $1,000 on the downside.
Yeah.
Let me get back to you, Roger. Just let me get back to you
Okay.
at the end of the day. If it's not.
Cool.
Interesting.
I'll definitely get with you tomorrow.
Yeah, I've done the reverse like too many times where I think it's going to rebound and it doesn't.
Yep.
So, but anyway, okay.
Well, thanks for your question, Jake. Let me add R. Kelly up here. This will be the last question of the group lesson.
Hey, Jason, can you explain a little bit more? Because I know there's a little bit more, because I just started doing more downside the last 2 weeks, but especially for new people coming in and learning this, what is more of the risk in borrowing compared to, going up?
So,
As far-
good question. So the risks to shorting as opposed to longing. Shorting, you have to use leverage. So you have to use someone else's money to start a short position. The risk to that is there's borrow fees. It can be past 10 cents a share. And 10 cents a share on a penny stock could be a lot. So we have to make sure we're watching the borrow fees on some of these stocks because we're automatically down when we start shorting. Other risks to shorting, like I talk about, is there is more downside potential than upside potential on stocks. Like I said, you can, if you start a short position on a stock at $1, the most it can go down to is, 0.00001 of a penny. So the max you can make is 99.99%. You're not going to make any more than 100%. But that $1 stock can rip up to $3 and you can be down 200%. Now, obviously, your broker is going to liquidate your position before then, but that is one thing to note. But the reason why I do like shorting is stocks fall faster than they rise. Why is that? Because the emotion of greed the emotion of fear is stronger than the emotion of greed. Meaning, a lot of people fear losing money than more people, getting excited to make money, which leads to stocks falling faster than they rise. It's just a statistic, and that's why I like trading to the short side. So there's positives and negatives, and we have to be able to weigh those. Cool. I like that question. Good question.
Appreciate it.
Yep. Alrighty, y'all. That's going to conclude it. Again, we're going to be doing 2 of these a week now. The next one is Thursday with one of our profitable traders here in our Discord, Corey Calver. A lot of you guys might have gotten a one-on-one lesson or a group lesson from him. I'm also going to be there, but I'm going to be the secondary speaker. He's going to be answering most of the questions. A lot of it's going to be beginner stuff. So please, if you have any questions about anything, that's going to be more open-ended. There's not a really topic of discussion. So any question you might have, please bring there. And I really encourage you guys to join these. Why? Because some people might ask questions that you might not think about, but you needed to hear. So that's why the group setting is very good. Obviously, the one-on-one is very good as well. But a lot of you guys thrive in group settings because people ask questions that you don't think. Last question, Victoria says a question. I'm going to invite you to speak, girl, and then we're going to wrap up this group lesson. You're on stage. You want to unmute your mic?
Hi, I just needed to know, is it the same time for the Thursday call?
Yes. Yep. We're going to be doing these at 10:30 right after trading,
Okay.
and we're going to transition them to about 11 o'clock.
Thanks.
Yep. Also, these are all recorded, and I'm going to be putting these in the premium archives. I just throw them up on the YouTube channel, but it often gets lost for you guys. So I'm going to throw them in the premium archives. So there'll be 2 in there a week, and we're also going back to the weekly recaps now that we have a video editor. So a lot coming at you guys. Like I said, we have a ridiculous amount of content we're pushing this week. How to find investors to start your own fund, if you will. Obviously, there's some legality to it, and there's more risk to it. But a lot of you guys need to do that, because if you're only investing with a few $100, it is you need to increase that, especially if you have strong connections. So we're going to be teaching you guys that also. I know a lot of you guys aren't interested in it, but I know a decent amount of you are. We are pumping out some awesome real estate content. While you guys are trading stocks, I'm done for the day. But there's a lot of homes that I'm looking at, and we scored an awesome off-market deal. I tracked this guy down. I'm not a stalker. Kind of. This one was kind of a total stalker move. Anyway, we're looking at today. We're going to keep you guys all posted on the whole flip in the BRR process, locking in the off-market deal. I wouldn't be shocked if I make anywhere from minimum $30,000 but up to almost $70,000 on this deal, not using any of my own money. So pretty cool stuff. We have pushing. Terry Potter said, I can't message you. Do you ever use bracket orders or trail stops? I don't, Terry. OCO brackets and things like that. I understand a lot of people need it, but so much can change within a trade. Problem with an OCO bracket is, what are you going to do if you need to lock it in a break even? Cancel all the orders, then click flatten. So what I do is I just trade my plan. Obviously, some of you beginners might need that to have a stop loss right in place. For me, I don't like OCO brackets. I would rather just trade my plan, because one bigger buy or sell order can obviously change it. Yeah, I know flatten does change it, but if you're planning on locking in all profit there, it's not very, very feasible. If, say, there's a big seller at, for example, if I'm trading OXY and I'm longing it to $100, well, I see a massive seller at $100 and my order's at 101. Instead of dragging it down and clicking save, I would just sell market there before the order gets filled, and then do that. So I don't use OCO brackets. I don't know many professional traders who do, but they are very good for beginners. Trailing stops, same thing. I've just never liked them, because I'm a flat top breakout trader. That's just kind of my strategy. In 5 years, if I find that, man, I think those are worth it, I'm obviously going to add it into the lessons. But as of right now, I don't use either of those. Alrighty, y'all. That's going to do it for today's group lesson. Again, we're doing these twice a week. Really encourage you guys to join. If you have any questions about the material we talked about today, adjusting to the new market conditions, direct message me. This is going to be on YouTube private for you guys up today. So if you guys want to rewatch this, we're going to have it up. Alrighty, y'all. Hopefully you guys enjoyed that group lesson. I'll catch you first thing tomorrow morning at 9:15ish a.m. EST. Have a good day, guys. Peace.